mode.
Good morning, everybody on the Pacific coast. Good afternoon to those of you on the eastern seaboard. Good evening to those of you in Europe. And if we have any Asian listeners tonight, well, thank you for staying up so late. So today we're going to talk about grow your own green oil field. And we conduct these webinars every Thursday at 1 p.m. Eastern, and they last for between 30 and 40 minutes, and you'll be glad to know that we try and stick very promptly to that time. If you look on the front page of our website, which is www.costaricainvest.ie, you can always find where our upcoming webinars are and what date they're on. Now, we do record the webinars as well, and the webinars are always available in the downloads and media area of our website, which I'm just pointing out there. Those are our contact details. Now, for those of you attending a webinar for the first time, you'll see a little control panel on the right-hand side of your screen, and in that there's an area where you can ask questions. Now, we will get to as many questions as we can at the end of the webinar, and what I always advise people to do is that if any questions pop into your mind during the webinar, feel free to type away into that little question box there, and we'll cover as many of those as we can get to at the end of the webinar. So, today we're going to tell you a little bit about a secret that the Texan oil men already know, and that is that an oil field is a great investment. It provides regular income and increasing prices. But today we're going to tell you a little more than that. We're going to tell you about an opportunity that you probably don't know about, and that is that a green oil field is an even better investment. It's a one-of-a-kind opportunity, and we have a limited inventory. We have a limited number of those lots available. And what can you expect from today's webinar? Well, we're going to talk a little bit about Costa Rica. We're going to talk a little bit about real estate in Costa Rica, real estate purchase and real estate ownership in Costa Rica. And of course, we're going to cover biofuels extensively. And we're going to cover this limited launch offer and the inventory that we have available. And we do have a bonus available to those of you who are attending the webinar this evening. And I'll tell you a little bit more about that at the end of the webinar. First of all, a little bit about me. I'm an expert at investing in Costa Rica. We've been involved in ecological hybrid investment and development opportunities for the past 4 years. The companies that we work with all have a very high level of success. We're sticklers for detail. We always do a very thorough due diligence before we agree to work with or represent any company or project. The criteria we have when choosing a company or project to work with are fairly simple. We like projects that include development land, agriculture commodities that are green and eco-friendly, sustainable, and we only work, of course, with high-quality, reputable companies that have a strong track record who we enjoy working with. We're particularly fond of investment opportunities that give smaller investors a chance to get involved. Of course, our investments are open to larger investors and medium investors as well, but we particularly like those that are open to smaller investors too. Now, if you had access to an investment, the first part of which, a hybrid investment, the first part of which doubles in value every 10 years, the second part of which is akin to turning the clock back to the 1990s and investing in the PC revolution, and that's a quote from Goldman Sachs. The third asset has historically seen average per annum returns of 20%, and together, all of these combine together to give an average per annum return of 38.2%. That's a 382% return of investment over 10 years. Is that an investment opportunity that might be of interest? Well, these are real assets and they're in your name, and that makes this an even better investment. Now, the investment we're working on today and talking about today is in combination with UBA and Day Group and, of course, us, Costa Rica Invest. Now, I know many of you on the call are already familiar with Costa Rica, but I'm just going to give, for those of you who aren't familiar, I'm going to give you a quick run through, a little overview of Costa Rica. So, where is it? Well, it's in Central America. There's more teachers than policemen, a literacy rate of 96%. This year, like last, they'll spend more than 25% of their entire national budget on education. And Costa Rica has a fantastic climate. People in Costa Rica live longer than most other places in the Western Hemisphere, with an average lifespan of 79 years of age. Now, Costa Rica contains over 5% of the world's biodiversity, and it's the country that practically invented ecotourism, and it ranks really highly in a number of polls. They're now ranked third in the world in terms of environmental performance. 2 years ago, they were ranked fifth in the world in terms of environmental performance, but they're improving all the time, and they plan to be number one. And that study is carried out every 2 years by Yale University. Costa Rica is ranked number one in the Happy Planet Index, and that compares the ecological footprint of a nation to its happiness. So the bottom line with Costa Rica is that they're very happy and they don't do much damage to the environment. And that study is carried out every year by the New Economics Foundation. Costa Rica is ranked as the 7th most politically and socially stable country in the world. That's according to the Economist Intelligence Unit. That's a fact that often shocks people. The 7th most politically and socially stable country in the world is located in Central America. Most people simply can't believe it. But it is, it's true, and that country is Costa Rica. Costa Rica is the most prosperous country in Latin America. That study is carried out every year by the Legatum Prosperity Index. Now, Costa Rica has preserved more than 25% of its surface area as natural park and forest reserve never to be developed. And it plans to be carbon neutral as a nation by 2021. That's the 200th anniversary of their independence. More than 95% of Costa Rica's energy requirements come from renewable resources, wind, water, and geothermal power. And that's as a result of decisions that the Costa Rican government made over 20 years ago. Costa Rica is a very small country, but it's got very big goals. They plan, as I mentioned, to be carbon neutral as a nation by 2021, and they're going to achieve this through various channels. Last year, they planted more than 7 million trees. That's more per head of population than anywhere else on the planet. To achieve this carbon neutrality, they're going to have to preserve more land and plant more trees. That means that they're going to have to preserve more land, and that's going to reduce the amount of development land available and put upward price pressure on existing development land. Now, Costa Rica is a very attractive tourist destination. The tourism industry is worth over $2 billion a year to Costa Rica, and they intend to grow that further. For the first 3 months of this year, tourism was up 11.5% year on year. I'm sorry, that's the first 3 months of last year, but that continued all the way through. And for the entire year, there was an increase in visitors numbers of 10.5% compared to 2009. So that's an increase in visitor numbers of 10.5% year on year when you compare 2010 to 2009. But Costa Rica is not interested in the one-off visitor. They want people to come again and again and preferably own a home in Costa Rica. To do this, they've made the process of emigrating to Costa Rica very straightforward. You and I have the same land and property ownership rights as a Costa Rican citizen, and that's enshrined in the Constitution. More than 1% of the population is already North American expatriates and retirees. And why are they looking to Costa Rica? Well, they're looking for a lower cost of living, safety, security, great healthcare, and a fantastic climate. The cost of living in Costa Rica is about 50% of the cost of living in the US, and healthcare is a fraction of the price. But Costa Rica is also looking elsewhere to generate revenue, and it's looking to high-tech industry. A combination of lucrative tax breaks, a highly educated workforce, and low labor costs has successfully attracted many multinationals. So Costa Rica is very business friendly with huge eco aspirations. It's stable, it's safe, and it's got excellent healthcare. Let's talk a little bit about the economy of Costa Rica. Was Costa Rica affected by the global economic downturn? Well, yes it was. But at the beginning of last year, 2010, the IMF visited and issued a very strong positive report about Costa Rica. They highlighted that economic growth had risen in the second quarter of 2009 and remained strong in the first quarter of 2010, and that economic recovery in Costa Rica was firmly underway. And they were right. National exports increased by 16.8% for the start of the year and continued to increase overall throughout the year. In fact, the economy grew by 4.5% in 2009 and is forecast, in 2010, and is forecast to grow by 5% in 2011. Let's talk a little bit about land in Costa Rica. Costa Rican land prices have seen some spectacular increases over the past number of years, and in some areas, property has already gone up by hundreds and thousands of percent. But there are two very big drivers which are going to affect land prices in the short to medium term in Costa Rica. The first of which is baby boomer retirees. Over 100 million baby boomers are going to retire over the next decade. Now, some estimates suggest that up to 20% will seek to retire abroad or have a home abroad in which they spend a significant amount of time. And what will they look for when they look to retire abroad? They'll seek safety, good climate, quality healthcare, and a lower cost of living. Now, Costa Rica ticks all of these boxes. Of course, Costa Rica couldn't possibly take 20 million retirees. It only has a population of 4 million, but a significant number will look to Costa Rica. And as a demographic, the retiring baby boomers are armed with more money than any demographic in the history of the world. The second big driver for land price growth in Costa Rica is their eco plans. Do you remember I mentioned that they plan to be carbon neutral as a nation by 2021, and over 25% of the surface area is zoned as natural park and forest reserve, never to be developed? Well, just before Christmas of 2010, Costa Rica announced that they had secured funding to increase their preserved area from 25% to 26%. And that process is set to continue. Year on year, there's going to be less land available to develop because they need to preserve more of that land to plant more trees to reach that carbon neutrality goal. Now, as I mentioned, our partners in this project are United Biofuels of America. Daniel Yepes is the president and Michael Klein is the chief operating officer. And United Biofuels of America has recently been awarded the title of one of the top 25 global energy entrepreneurs in the world. And that title was awarded to them by Shell Oils. So let's move on to the biofuels aspect of this. Let's talk a little bit about biofuels and specifically about this opportunity. So what are we going to talk about? Well, we're going to talk about investing in our future in a smart, ethical, and profitable way. We're going to cover UBA's background. We're going to cover biofuel. We're going to cover income land ownership in a hotspot in Costa Rica. And we're going to tell you a little bit about how combining these factors makes a very smart, ethical, and profitable investment. Now, the name of the program is Renewable Energy Farms. And UBA is the first biofuel consultancy and development organization in Costa Rica. And they've been working in outreach and planning with different governmental organizations and bodies throughout Central America, not just in Costa Rica, although they're based in Costa Rica. They've been primarily focused, apart from the past year and a half, prior to that over 4 years, they've been working on the commercialization, deployment, more for the macro or larger investor. They have 4.5 years of research and development, and most of that has been focused on best practices in agronomics. Some of their awards, partners and consortiums and members include Earth University, and most of the UBA team are teachers or have graduated from Earth University. The Minister for Agriculture, or MAG as they're known in Costa Rica, have been working with them for the past 4.5 years, and in fact the Ministry of Agriculture sits on their advisory board. As I mentioned earlier, Shell has selected UBA as one of the top 25 energy entrepreneurs in the world. Recope is the national fuel system in Costa Rica, and they've just recently been privatized and privatized their biofuel requirements. Costa Rica has a very strong biofuel requirement in itself. In the next couple of years, by 2012, they aim to have a 10% blend mixed into their fuel, and that's been mandated by government to purchase every gallon of oil grown in Costa Rica. International energy advisors voted UBA the best investment in Costa Rica, and the Costa Rican News voted UBA, or United Biofuels of America, the best green company in Costa Rica. And as I mentioned earlier as well, UBA work in conjunction with Day Group, which is one of the strongest real estate consultancy organizations in Costa Rica. One of the biggest events that UBA organize is the Jatropha Harvest Experience, which is something that they put on a yearly basis. The next one will be in May of this year, and that's going to be in Colombia. It's a unique event that brings together various people from the biofuel sector. Now, there's just not a conference day. They actually bring people up to a plantation, walk them through the entire Jatropha process, and it's generally a 3-day event where there are meet and greet parties, a full conference day, a full day on the farm, and several smaller events going over. As I mentioned, this year it's on May 25th to 28th, and it's in Colombia, in a beautiful area and a beautiful resort. And they'll be working with their partners down there, developing over 30,000 hectares. This Jatropha harvest experience brings together investors, developers, landowners, technologists and researchers, governmental and educational organizations to promote what United Biofuels of America call the Million Gallon Challenge. The Million Gallon Challenge came about a couple of years ago when United Biofuels of America were approached by the United States Department of Defense, and they were developing a technology to convert Jatropha biofuels into JP8 or jet fuel, and their requirements were 1 million gallons a day. So United Biofuels of America began a very intensive research program to enable them to supply them with that 1 million gallon requirement. Out of that, they came up with the 1 million Gallon Challenge, and they've been promoting this through the harvest experiences. UBA already has 80,000 hectares pledged in, and they've developed strategic partnerships with micro-investors, macro-investors, renewable energy farms, and UBA realized as a number of things as they were developing the program, and that was that they just couldn't depend on macro or very large investors. They had to approach micro-investors, so hence they came up with the program we're going to talk about today. When United Biofuels of America were developing the 1 million Gallon Challenge, they came across some important information, and that was that there's an extreme supply and demand gap. United Biofuels of America get daily requests for 40 metric tons, 25 metric tons, 10 metric tons a month from various refineries and organizations all over the world. And quite simply, they're unable to supply them. They simply don't have enough plants in the ground. Supply and demand is continuing to grow because this is a mandated product. So more and more people by law have to involve themselves in biofuels and supplement their fuel systems with biofuels. And there's simply not enough available. So we have to tell many of the macro investors they have to guarantee their own supply because it's cheaper. Otherwise, they remain in the bid market, and it's going to become more and more difficult into the future. Anytime you have a supply and demand ratio that's so extreme with a mandated product, literally this means that you're always going to have end buyers and demand for the products is going to be very, very high. The solution is quite simple. More plants in the ground. As many oil-bearing plants as possible. And UBA need to combine micro and macro investors and look at different ways for commercial developments and cooperation. They need to plant as many trees as they possibly can to produce the biofuels that are required. So the renewable energy farms is one solution that meets this criteria. What we're looking at here is a typical Jatropha plantation. Now, we'll talk a little bit more about Jatropha and what it is in a couple of minutes. But this type of Jatropha plantation that we're looking at here is an agrarian parcel, and it grows very well in the tropics. The plantation itself is broken up into parcels, and the parcels include land, the roads, and electricity. These are the investment highlights of the renewable energy farm that we're going to be talking about later. And there's a low break-in investment of just $35,000 for micro-investors. Micro-investor is somebody that we refer to who has between, say, $30,000 and $350,000 to invest. Now, typically, UBA has been dealing with very large commercial deployments, and they were getting an awful lot of calls from micro-investors saying that they had $30,000 or $50,000 or $100,000 to invest in biofuels, and they were asking what could they do, how could they get involved. And at the time, United Biofuels of America didn't have a solution because all of their developments were on a macro basis and commercially sized. So on the one hand, they had an extreme supply-demand ratio, and on the other hand, we had an extreme number of micro-investors looking to invest in something other than just the stock market. Renewable energy farms came about as a result of this information. It's a low break-in investment with a minimum investment of $35,000, and that includes 5,000 square meters of titled property in Costa Rica. It's fully managed plantation with 800 income-producing trees. The biofuel income over the investment term is almost $50,000, and that's the return the investor will get just from the biofuels coming from his agrarian parcel. The property valuation is going to rise over the next number of years, and we're going to look at some of those factors. Essentially, these parcels will produce an average of 38% per annum return. These are green oil fields producing high quality, already approved vegetable oils. UBA intercrop two main biofuel variant plants. One is Jatropha and the other is Maca palm. These are proven feedstocks, and they only grow, and UBA only grow proven feedstocks. These two plants are high yielding and profitable. Jatropha, for example, has been selected by the US Department of Defense to be the top #1 drop-in replacement for fuel. And since then, there have been a number of aviation companies flying with biofuels. As a matter of fact, from next year, flights flying into Europe not using biofuel blends are going to be taxed. So again, it's a mandated market. Jatropha begins producing in the first year. Doing nothing, a plantation can produce up to 1,200 gallons per hectare. It has over 40% oil content. Very importantly, Jatropha is not a food crop. It doesn't compete as a food crop, as for example corn does in ethanol production, and it outperforms other feedstocks on return of investment and net energy input. Maca is a very interesting palm. It produces multiple types of oil, all in high demand. It's very easy to grow, and it's native to Costa Rica. It can produce up to 4,200 gallons per hectare. It has a very high oil content of up to 60% or more, and it's easily intercropped, and again is a proven product already grown here in Costa Rica. Okay, we want to turn the clock back 100 years now and tell you about an interesting fact. Rudolf Diesel in 1893 created the diesel engine, and he created it to run on biofuels, specifically peanut oil. In 1912, he presented it at the World Expo, where he quoted, "The use of vegetable oils for engine fuels may seem insignificant today, but such oils may become in the course of time as important as petroleum, and coal tar products are at the present time." And here we are now 100 years later with various mandates and protocols all over the world to grow biofuel. And we need to grow more of that biofuel and do so very quickly. There are a number of reasons for that. Fossil fuel and biofuel prices will continue to rise dramatically over the coming decade, and analysts predict quite large increases. As a matter of fact, the oil price this morning is, well, we've all seen, because of instability, well over $100 a barrel. And there are many reasons other than political instability that fossil fuels will continue to rise. Firstly is what they call peak oil. Peak oil is reached when supply goes into terminal decline. Most experts have said that this decade we've already reached peak oil, which means that from this point on, our supplies are going slowly into decline and ultimately will end up at zero. There are rising upstream and downstream costs. It costs us more every year, every month, every day to drill the oil, transport it, and refine it. Experts have said that developing countries like China and India will overtake the US in terms of energy consumption. Well, they're right on. Just wrong on the year. Earlier last year, China became the #1 energy consumer in the world. India is rising rapidly behind them. So we have these developing countries, as well as many others, coming onto the market rapidly, and they're continuing to grow at exponential rates and driving fuel prices up. That's why Goldman Sachs has predicted, well, they predicted $100 a barrel by 2011, and we're already well over that. And then the next decade, they're predicting $350 a barrel. But why are biofuels going to rise in prices? Well, this is interesting because it's essentially because it's globally mandated. There are already 127 countries around the world that have mandated biofuel development. The aviation industry is also mandated in the development of biofuels. The aviation industry itself consumes 60 billion gallons of fuel per annum. And as I mentioned earlier, they're going to be taxed in certain parts of Europe if they don't have biofuel blends. It's the same with the transportation industry. They've all been mandated. We have protocols such as the Kyoto Protocol, which is we moved over to Copenhagen, and then subsequently the Cancun Protocol. And these are driving further standards to be developed for biofuels. As I mentioned earlier, Costa Rica itself has a national biofuel program and a carbon neutrality goal by 2021, and they have a 10% blend requirement by 2012. Earlier this year, they privatized the handling of biofuels. And essentially, this means that Recope have been ordered by the government to buy every gallon of biofuel grown in the country, and it has to be purchased, of course, at fair market value. So we're going to see unprecedented growth over the coming decade in biofuels. So, taking all that information together, United Biofuels of America went to their advisory board and explained that on the one hand, they had an extreme supply and demand gap, how there are not enough plants in the ground, that macro developers were not growing fast enough, and that large developments were taking a long time to develop. On the other hand, they had a large number of micro investors looking to invest, and so we needed to come up with a solution. And we came up with some parameters for that solution. So the idea was to come up with something that had to be suitable for the micro investor, had to meet the National Biofuel Program demands, had to be sustainable, had to have a low entry point, and the investor had to have the security of title held in real estate. There are lots of opportunities out there in biofuel investments where you're simply putting dollars into a fund, but you have no title ownership of anything. And this is a very important point for us to be able to offer investors. And that's the titled real estate security, which also has exceptional appreciation potential. The other factor that was put to the board was that the solution had to pay for itself within a period of 10 years or less through the biofuel income or alone. So the combined return on investment must be over 300% in the term of the investment. So ultimately, what did they come up with? Well, they came up with the renewable energy farms in what we call hotspots. So United Biofuels of America sent their teams out to find hotspots, which are pieces of property, lands or areas that are going to see rapid proven development growth over the next 5 to 10 years, and also had to have ideal growing conditions for biofuels. They invented 5 hotspots in Costa Rica. Now, the particular area we're looking at is the southern zone of Costa Rica. And what makes this particular area interesting in Costa Rica right now is that in terms of investment over the next 10 years, there are 7 important factors. It's located in the Buenos Aires canton or county, and the entire southern zone really hasn't seen the type of development that the rest of Costa Rica has. So it's considered to be the next growth market section. And if we look at some of the factors for the southern zone, it's very interesting in terms of land value. First of all, Costa Rica's third international airport has just been approved for Palma Sur, which is about 40 to 45 minutes away from the renewable energy farm. Now, we have a track record on what happens when a new international airport opens. Previously, there was only one international airport in San Jose, which became overloaded, so they developed another in the northern region of the country in Liberia. What happened in that region was that as soon as the airport development began, the land price quadrupled over the next couple of years simply because of infrastructure and improved access. This new international airport is very exciting as it's only the third international airport in Costa Rica. And we already know from Liberia what happens when that increased airport traffic comes in. The farm is only about 40 minutes away from that airport. Another important point is that the second largest infrastructure program in the whole of Central America is going into a valley just south of the renewable energy farm in the southern zone. Now, this project is a hydroelectric dam that's going to feed regions both north and south in Central America. And it'll be second only to the Panama Canal in terms of, I beg your pardon, in second only to the widening of the Panama Canal in terms of capital expenditure. Another point for the southern zone to be considered is that it's considered to be the best agricultural area in Costa Rica. And this is why Jatropha and maca uva palms are already achieving very high yields in this area. The renewable energy farm is only an hour from Golfito and the Panama border, which is a very large tax-free zone. And it's also very close to the beautiful Osa Peninsula. The Osa Peninsula, of course, hosts the Corcovado National Park, which is the largest biological reserve in Central America, and it's less than an hour away from some of the best beaches in Central America. And some of these beaches have been rated in the top 10 in the world. So there you can see the renewable energy farm. That's just simply a little map of it. So let's look at the investment parameters altogether. So what is this renewable energy farm? Well, the type of asset is that it's a biofuel producing Jatropha and Maca palm plantation. The investment provides annual revenue from the biofuels and land appreciation growth. Tenure, of course, is, you own the land, you own the Maca, you own the palm, but our figures are based around a 10-year hold. Protection, of course, is that you own the title on the land. Each of the agrarian parcels is 5,000 square meters, and the cost of an agrarian parcel fully planted with Jatropha and Maca is $35,000. So let's look at the revenue forecasts. You'll see in the biofuel income column that Jatropha starts producing in the first year and continues for the next 50 years. At years 5 and 10, at years 5, the Maca palm kicks in, and that effectively doubles the biofuel yield from then onwards. So it's 5 years before the Maca really produces anything, and you can see that there in the projection. So year 1, you will get $350 worth of oil produced by the Jatropha. Year 2, $1,400. Year 3, $2,625. Year 4, $3,500. And then in year 5, the Maca kicks in and effectively doubles the year yield from there then on. So very important here is that you can see that the biofuel income totals $49,875, or about $50,000 over the next 10 years. Now, I must say that this revenue reflects no increase in biofuel prices over the term. We've already talked about the increasing cost of biofuels and why they're going to increase over the next several decades. But I haven't included any increase in biofuel pricing in these projections. Last year, the price of crude biofuel oil for Jatropha was $2 a gallon. And within that year, it rose by over 50 cents per gallon. So let's say if it even rises by just another 50 cents per gallon over the next 10 years, then your return would rise from about 50,000 to 60,000. The property valuation in this particular area, because of infrastructure, the airport, large hydroelectric dam, improved access, is going to see dramatic growth over the next 10 years. Once you've invested, UBA plant the Jatropha trees and the Maca, but they also put in roads, electricity and water to each lot. Instantly, that effectively will double the value of the land. Hence why there's a 70,000 valuation after year 1. Now, as I mentioned, UBA works very closely with Day Group, one of the largest and most respected land development consultancy groups in Costa Rica. They asked Day Group what they think that the land will increase by as infrastructure in this area improves. And they said a 7.5% appreciation yearly for the next few years up to year 5. Now that's a little higher than the average price increase in Costa Rica, which is about 5.6%. But they feel that this particular area, because of the airport, is going to see significant growth. Once the first phase of the airport is complete, the second and third phases will start in years 5 to 10, and they're predicting that the land price will increase by 10% thereafter. So effectively, over a 10-year term, your land will have increased from 35,000 to 154,000 in terms of land appreciation in that period of time. So this is a very strong investment, and together between the biofuel and the land gives an average of 38.2% per annum over the 10 years. One important point to mention is that many micro-investors in the past, after attending various micro-investor programs, they were getting a lot of questions about investing in condos. Many people travel to Central America and specifically Costa Rica, and they really are thinking about a condo investment. Why are they looking for a condo investment? Well, they're looking for an income-producing property. And, of course, up to, really this year, the only option was to buy a condo, try and rent it out for the next number of years until they're ready to retire in, say, in 10 to 15 years' time. So, effectively, they were looking for the condo to produce income when they rented it out, and then they were looking for perhaps capital appreciation if they plan to sell the condo, or alternately perhaps to move into the condo themselves. So we've done a little comparison here. How do you compare the renewable energy farm to a condo investment? So we put together this slide to give a very quick comparison or synopsis. Now you can see that the renewable energy farm side, that for $175,000 you could purchase 5 lots. Compare that to the average condo investment in this area, which would be about $220,000. The land value on the 5 lots is projected to be worth over $770,000. Well, exactly $770,000, and that comes from our projection that we ran through on the previous slide. Now, the land value on one condo is projected to be $500,000. A significant difference. Notice the question marks. The experts, of course, don't know what the value of the condo is going to be in 10 years' time. If 5 or more condos appear around the area, then there's going to be lots more condos available for rent. If there's a lot more condos available for rent, that's going to drive the value down. But on average, we would say that a condo should double in value every 10 years. So 220,000 to 500,000, probably not unreasonable. The total income on the renewable energy farm from all of those lots is almost 250,000, as opposed to the condo, which in fact is only really about 50,000. And again, there are question marks. Essentially, to hit that number, you're going to have to rent the condo 2.5 times a month regularly and consistently over the next 10 years, and in a competitive market, and that's just to come up with 50,000 after your costs. So, if you add the two together, the total value to you of an investment in 5 of those lots is slightly over $1 million. The total value of an investment with those question marks in one condo, about $550,000. But you get lots more with the 5 lots. You get ownership, title, property in a high growth area, and more flexibility. Because you can liquidate a lot whenever you need to. If you wanted some cash to build a house, you could sell a lot to pay for the cost of building your house on another lot and keep the rest in the biofuel pool program. Most important, you get 5 titled pieces of property. That's a little over 6 areas as opposed to a condo where all you have is one condo at the end of 10 years. And and at that time, of course, you've got a 10-year-old condo, plus all the costs associated with that, and the questionability as to whether you can rent it out 2.5 times every month consistently over that 10 years. And of course, over those 10 years, you're going to have to replace appliances and do ongoing maintenance and all those good things. One of the most important points when it comes to this renewable energy farm opportunity is flexibility. And that's very important in investment. And it's one of the parameters that UBA asked their team to come up with when they were putting together the Renewable Energy Farms program. It had to be secure. It had to pay for itself over 10 years. It had to have the security of title property, but it also had to be very, very flexible. They wanted to give the investor, particularly as they're micro-investors, as much flexibility as possible in terms of what they want to do, what they want to build, if they want to sell the properties. So you can opt out of the biofuel program at any time. It's an opt-in program. And if you opted out of the program, for instance, you could build a home on your lot, and you could run your house off-grid with the biofuel on your property. Alternately, you could build a house on your property at any time and just sell and keep the rest of the property in the biofuel program. Remember, these are very large lots. They're 5,000 square meters, which is about 1.2 acres. So you could cut a small area into it, build your home, and effectively live looking out your window at a very beautiful plantation, like a tropical orchard. And you'll know that that tropical orchard is producing you money every day. So what are the steps for getting involved? Well, first of all, you need to reserve your renewable energy farm investment parcel. Then you receive and fill out and return your investment package forms. You will receive a green oil field national biofuel certificate, and that certificate an important area that we haven't talked about here at all is carbon credits. And this is something we're working on at the moment. And that certificate will also qualify you for carbon credits. You will, of course, be able to see your investment in the National Registry, and you'll start earning income almost immediately. So to summarize the investment highlights, it's a low break-in investment of $35,000. It's 5,000 US dollars. It's 5,000 square meters of titled property, fully managed plantation of 800 income-producing biofuel trees, and the price includes the planting, harvesting, maintenance, and management of the tree. Every year, the trees are planted, pruned, drip irrigation is put in to make sure that the plants are producing the maximum yield. UBA will harvest, process, and sell the product and return 100% of your return, less a management fee, which is just 10% of the return. All of the figures we've quoted have taken out that 10% already. So those are the net figures that you received. So essentially, you're getting almost 100% of the biofuel proceeds over the course of the term. And of course, it's fully managed. The property will pay for itself in less than 10 years. And that's at today's biofuel prices. And of course, the property valuation over the investment term is almost $120,000. It's located in one of Costa Rica's primary hotspots in terms of real estate development and growth, and it gives you maximum flexibility. It combines two growth markets in one investment, biofuel market and real estate. Sales of the biofuels are guaranteed because it's a mandated product. And we expect the combination of the two to yield you over 38% annual return, making this a smart, ethical, and profitable investment. Now we have a few just quick slides here of some of the beautiful animals that are in this area. The southern zone is a very beautiful area. As I mentioned when I was talking earlier, Costa Rica contains over 5% of the world's biodiversity. That's an incredible 1 in 20 of every living thing on this planet lives in Costa Rica. That's actually a baby sloth peeking out of a little box there. Of course, lots of people are looking to retire to Costa Rica. So, I had mentioned that there's a bonus for those of you on the call this evening, and that is that UBA will include, for anybody who's on the call this evening, they will include the registration of each of these lots in a Costa Rican SA or limited company. It's always advisable from a taxation and an ease of management point of view to hold your real property in Costa Rica in a Costa Rican SA or limited company. The cost of setting that up is typically between $500 and $1,000, and UBA is going to pick up that cost for you for anybody who attends, or anybody who's attending this evening and decides to go ahead with an investment. The next thing is that UBA will also, for the people who are on the call this evening, include a ticket to the Jatropha Harvest Experience. There are two scheduled for this year, one in Colombia and a second one later on in the year in Costa Rica. And you can take your choice as to which one you attend. Each of those tickets is worth $1,500. That's what they retail for. So, how do you get involved? Well, if you're seriously interested in a smart, ethical, profitable investment, register your interest now. We do have a limited number of these lots available. So send an email to info@costaricainvest.ie. Include your name, your phone number, and the number of lots that you're interested in. We'll register your interest, and we'll get one of our sales consultants to contact you immediately. Now, it's not a high-pressure sale, of course. We'll get an understanding of what you're really looking for, and if this investment is suited for your needs, and if it is, and you decide to go ahead, we'll be delighted to help you with that. So if you're seriously interested in this, send an email to info@costaricainvest.ie. Include your name, phone number, and the number of lots that you're potentially interested in.